Hey everyone, it's Maddie. Welcome back to my channel, and today I'm just going to define some basic insurance terms for you guys. I know when I first walked into dealing with type 1 diabetes, some of these terms were very overwhelming, and I had to quickly learn what all these terms meant and kind of how they applied to me. And I hope to delve more into the aspect of the pharmacy benefits and more into the specific ways that insurance works versus the premiums, which plans might be better, etc. Kind of how that works. I am not an insurance expert. I'm just going to be defining the basic terms that mostly applies to pretty much every insurance out there. Again, every insurance plan is going to be different. The amounts are going to vary for all these different costs and all these different estimates. But with that being said, I'll jump into the definition. So the first term I have on here is the premium. The premium is the monthly amount that you pay for your health insurance plan. This isn't figured into your out-of-pocket maximum, so that's basically what you're paying every single month out of your work or out of your own pocket to maintain health insurance and to keep your policy and your plan active and valid. Premiums can vary depending upon what kind of plan, but I won't delve into that too much. But that's the basic definition of premium. Number 2 is the deductible. The deductible is the amount you must pay out of pocket for covered expenses or supplies before the insurance company will cover the remaining costs. So for us diabetics, it's our diabetic supplies, medications, any type of equipment we might need to kind of keep ourselves alive, and same with any other medical condition. You have to satisfy a certain amount of money before the insurance company will even pay a portion of that. And again, depends upon what type of insurance you have. Some deductibles are higher, some are lower, but for the most part, from what I have seen, the general rule, not always true, if you have a higher deductible, your premiums usually ride a little on the lower side, but in turn, if you have a lower deductible, you might be paying a higher premium. It all depends on your plan, and that's how they kind of compensate and balance those out, because they do have to get their money from somewhere, you guys. The third definition is a co-payment. This is a small fixed amount that you pay that's outlined in your policy that you pay every time you go see a medical professional or get a medical service provided to you. For example, if you go to the endocrinologist, or you go to see a doctor, or go to see your physician or urgent care, except for physicals. Physicals are completely covered under health insurance, like having an annual physical exam. But if I were to just go see my primary care provider or my endocrinologist, they have different set rates. They might say pay $100 for the endocrinologist, but because primary care provider is a general doctor, you pay $30 or $40, and that's what you pay every time you go to see, and you have to pay that co-payment before you are allowed to walk in and be treated by this specific medical professional. Number 4 is exclusions, and that's basically as basic as it sounds. It's the stuff or medications or supplies or equipment that is not covered by your insurance. For example, as diabetics, usually insurance will cover, for rapid acting, either Humalog or Novolog at the cheapest price. For me, my insurance covers Humalog at the best rate, so I am on Humalog. But my endocrinologist told me not to get too comfy and cozy, and I might switch to Novolog. I'll talk more about this. I have a wonderful video coming up for T1D with Maddie episode 3 at March 1st about how I feel about all the insurance stuff. You're going to get a heck of a lot from me from then. But anyways, that's exclusions. Number 5 is out-of-pocket maximum or out-of-pocket. So this is combining your co-pays, your deductibles, and your co-insurance. After this out-of-pocket maximum is met, you stop paying completely, and your insurance takes over covering everything for the remaining deductible year. Usually it goes from the first of the year to the first of the year. Now, I'm not sure if that's true for all insurance companies or for all countries or residences where you live, but that is the case for me. It goes from the first of the year to the first of the year, as far as that goes, at least with me, that I have noticed. Now, this out-of-pocket maximum, again, the cost can vary depending upon what plan you have and what insurance company you're under, but they're usually very hard to meet unless you are, well, Depending on how much supplies you use as a diabetic, I don't think I'll ever reach the out-of-pocket maximum for my insurance company. My main goal is to satisfy the deductible as closely as possible. I'm under a plan where the deductible for a single person is a little bit higher, but I think the premiums that are paid are a little lower. I'm not 100% sure because I'm under one of my parents' insurance plans, but I do know some of the basic stuff just because I do pay for a lot of my co-insurance, a lot of my co-pays out of all of my pocket. So, here we go. This is the 6th term. This is co-insurance. So, this is the money you pay for covered health care services. This is calculated as a percentage. Typically, at least with a lot of the insurance companies I have seen, they do an 80-20, meaning once your deductible has been satisfied, the insurance company will pay 80% of the cost and you pay the remaining 20% in co-insurance. Now, it could be 70-30, it could be 60-40, it could be 50-50, it could be 90-10, depending on what kind of insurance you have, but I think a very typical one is 80-20. Now, you continue to pay this co-payment after the deductible is met, and you will continue to pay it until the out-of-pocket is met. So it's kind of like the second step. So first is to satisfy the deductible. The second step is to continue to pay your co-insurance, and if you end up reaching your out-of-pocket max, great, you get everything covered at 100%. So that is how this works. And again, I'm delving more into the healthcare and the insurance for America, the United States of America. I know in other countries they have other ways of dealing with their healthcare. And again, I'm going to jump more into March dealing with this type of stuff because I understand things come at a cost, but I think America could do their health system a lot better as far as eliminating costs for someone like us, type 1 diabetics, who it wasn't our fault that we ended up with this disease, and we have costs just like everybody else to live, just like non-diabetics do: food, water, shelter, schooling, whatever we're in. And to tack on all this extra cost, we almost are driving ourselves into debt literally to live and be an organ, which is a shameful to Number 7 is network. Network is the place or the healthcare place or the provider that has signed a contract or an agreement with your healthcare insurance company. Basically, say your doctor or the main like health network that you're under, whatever, that there's a variety of different names. Whatever your doctor or this healthcare facility is under, if they are in agreement with your healthcare company, they are considered in network, and you pay a lot less to deal with extra out-of-pocket costs. Now, if you decide to go to a facility or a practitioner or healthcare provider that is not in your health insurance network, you will be paying more out of cost. And again, that depends on whether or not you have an HMO or a PPO plan, which leads into my 8th definition. I'm going to talk about the main difference between an HMO plan and a PPO plan. Again, certain ones are better than others for certain people. The HMO plans, I believe, used to be cheaper than the PPO plans, but I think that has changed now. It all depends upon, again, what insurance you have, who you're under, and all those policies. Now, an HMO, it stands for a health maintenance organization, and basically with the HMO plan, you have to have a PCP or a primary care provider refer you to different doctors. You are kind of stuck with this PCP, and they have to put you with different specialists, different doctors, different healthcare providers to get the services and the medical necessities and medical look-ats that you need. Now, again, it could be more cost out of pocket or less cost out of pocket, depends on your insurance. It depends on what your policy is and everything else. But in contrast, you have a PPO, which is a preferred provider organization. And this means that you do not necessarily have to have a primary care provider refer you to a specialist or another doctor. You can choose a specialist or a doctor on your own. Just make sure that they're in network to get the cheapest out-of-pocket costs as far as paying extra bills after the insurance doesn't cover anything, etc., etc. Personally, I think a PPO is better, just because I don't think I want to be tied down to a specific doctor that has to force me to refer to me to a certain area. I think my plan's a PPO. I am not 100% sure. I would assume it is, because I don't think it says anywhere in my policy that I have to be glued to a primary care. I have not a clue though. I've had a primary care for a little while anyways, a newer primary care that's an adult primary care, transition from pediatrics to primary, adult primary care, so I don't really know. I guess this really doesn't apply to me, and I have my endocrinologist set already, and all the doctors I see, even the eye doctor, the ophthalmologist I go to once a year for my dilated eye exam, she is under network. So I guess I really haven't had to deal with that. But if I were you, I think a PPO is a better option because it gives you a little more flexibility of not necessarily having to have a primary care provider. Don't get me wrong, primary care providers are great, but sometimes I feel like they can get set in their ways and they might control who you go to and who you go see, etc., etc. So in my opinion, a PPO is a better option, but again, it's going to all be depending on what you can afford, what your worker employer tends to provide, or what you can pay for yourself out of pocket, depending on if you want to get insurance from your work or if you want to get insurance out of your own terms and on your own pocket costs and on your own policy. So anyways, I hope this helped define some of these terms, and I hope I gave you a little bit of examples, kind of how those things work. Again, it all depends on your insurance plan, but as always, feel free to call your insurance anytime and ask them what your benefits are, write them down, look online, look at your claims, keep track of everything like that. Again, I hope to delve more into the other aspects of insurance, and like I said, I think there's some ridiculousness that goes on with insurance, especially in the United States. I get things have to have a cost, but I'm going to end it at that. I will save all my wonderful opinions, facts, and rants for March 1st. Excuse me. But anyways, I will see you tomorrow for another video. If you enjoyed today's video and it gave you some help and advice and some good examples on how these vocabulary terms apply to insurance, give this video a big thumbs up. Feel free to subscribe down below if you want. I am getting close to sharing my diabetes diagnosis story. And I will see you for another video next time. Until then, take care, God bless, be kind, spread positivity, and be thankful. Bye, everyone.